All right, welcome back to the channel, everyone, and thank you for tuning in to another video here. Let's talk about how you can actually make an income, make money trading the future markets, okay? Today, I'm going to just kind of give a rundown of the strategy I use. Now, if you're someone that's an experienced or professional trader, you're making money right now, you don't have to watch the video. This video is really to inspire those individuals that want to, or beginner traders starting out in their journey, to be able to trade and make money daily. All right. Again, if you are someone that's inexperienced and you're looking to find a way to become a very profitable trader, this video is for you. So please take the time to watch the entire video, because I'm going to discuss with you a simple strategy that I use daily. Okay. I have loads of videos here on the channel that discuss my style of trading supply and demand, all right, and how it works for me, how I'm a consistent and profitable trader. I have some live recorded videos as well where you can capture me trading. I post my screenshots of my trades over on the Discord community, and so do other members of the community as well. So if you're interested in joining the Discord, find that link down in the description portion of the video, okay? The strategy and how I trade is very simple, but like I always tell people, you know, within the community, here on the videos, out in the community, I always talk about market structure and price action. If you fail to master those two concepts there, all right, you're not going to make it in this business. I'm going to be flat out and tell you right now, it's going to be extremely hard. You have to 100% master market structure. It is essential. What is market structure? It's simply defining and figuring out what the market is doing, the overall picture. What is the market doing at any relative time period during the session? Okay, is it moving higher? Is it moving lower? Those typically are 99% of the time is how the market is moving, trending to the upside or to the downside. When it comes to supply and demand style trading, I want to say this simply. Okay, it works best in a trending market. Okay, and part of the strategy of how I trade, I'm always looking for a break of structure. If there is no break of structure, most times I am not looking to trade. Okay, I have to see a break of structure, meaning if we're trending to the upside, price pulling back, break of structure above, and looking for a pullback to a key area of demand. Moving lower, prices moving lower, trending to the downside, making lows, lower highs and lower lows, and pulling back, okay, to the inner portion of a previous swing where there was a break of structure at, that's a supply area. It's as simple as that, okay? Again, if you're interested in also watching some of the other videos, guys, I have tons of videos discussing, explaining in detail about supply and demand. So please go back and watch those videos. If you do not understand market structure and struggling with market structure, I posted a video here on the channel a few days ago. I'll go ahead and show you right now. Go to the homepage channel here on YouTube, okay? Scroll down, you'll find a video posted almost 2 weeks ago titled Market Structure Made Easy. Watch that video in its entirety, okay? All right, and it should help you, okay? I'm not saying you have to learn market structure from me, but I put together a pretty simplistic and easy rundown video that, you know, is pretty self-explanatory. So that should help you out a lot, okay? Again, that video is over on the homepage on the YouTube channel. Just scroll down, you'll find it there. Now, let's go over, you know, a couple trade setups here and what I want to talk about supply and demand, what we're looking for, okay? Now, first and foremost, one of the key ingredients and secrets to trading is really determining the overall direction. Should I be trading short or should I be trading long? Use your higher time frame to allow you to determine which way to trade, okay? All right, you have to master these things if you really want to become profitable and make a daily income trading supply and demand. I'll say that again, okay? So, I use a 60 range chart when I am intraday trading during the US session, all right? Supply and demand is universal. It works across all markets, okay? But we're talking about the futures here because that's what I trade, all right? And everyone over on the Discord community who are part of this community trade the future markets as well, all right? So my higher time frame chart, start there, okay? Whatever that may be, it may be a 60-minute chart, it may be some means of a tick chart or volume chart, whatever you're using as a higher time frame. The market is, since just basically October the 30th, okay? I'm showing you examples, okay? This type of stuff plays out, doesn't matter what week, day, just pay attention to the higher time frame to help you see what is the overall direction. the market starts to make a higher highs and higher lows to the upside, breaking structure to the upside. Breaking structure to the upside, what does that mean? Taking out key areas of structure to the left-hand side of the chart as it is moving higher, making higher highs and higher lows, all right? So when it is doing that and consistently doing that to the upside, then you have to train your mind and tell yourself the market is moving to the upside. Let me take trades moving to the upside on my lower time frame chart. So once we've clearly identified which way the market is moving, we're just looking for setups to go long. If the market was trending to the downside, okay, and started breaking structure to the left-hand side of the chart, we look over here, market's moving lower, okay, and it starts to make lower lows and lower highs, breaking structure to the downside, then we're looking to go short, okay, scaling down to our lower time frame chart. All right, so now that we've depicted which way to trade, let's go over to the lower time frame chart and look for some demand setups. Because the market's moving higher, we look for demand setups on the lower time frame charts where we have a breaker structure. Breaker structures are one of the key ingredients to trading supply and demand. I have to see it to trade, okay? It must happen. Or if it does not happen, when I'm looking for a zone to trade on a lower time frame chart, I'm not interested in a trade. I must see a breaker structure, okay? Then a pullback, all right? To a key area of demand, which we're going to discuss now. I'm going to show you a couple examples, all right? So let's go ahead to the lower time frame chart. All right, so even on the lower time frame chart, you're going to see the market moving in sync with the higher time frame. It's just you're going to see more price action on the lower time frame, okay? All right, more swings, okay? And you have to be able to identify the breaker structures to be able to take these trades, you know, in the directional trend of the market. So the market makes a highs, higher lows, higher highs, higher lows. It's chopping, you know, the swings are smaller, but, you know, it's still making higher highs and higher lows, breaking structure to the upside. A breaker structure just means we got a significant pullback, and then the market is staying in its directional flow, moving higher, okay? Please, again, watch that market structure video. Moving higher, make a high here, higher low, higher highs. So let's take a look now, okay? So as long as the higher time frame chart is moving higher, look for pullbacks where you have breaker structures with on the continuations to the upside, meaning prices or the market is making higher highs and higher lows. Now don't look at this setup right here. Even though I have this box right here, this was a demand zone, but this setup here was actually a liquidity sweep or a liquidity grab, they like to call it. You know, most traders will call it. But let's take a look at ones that are actually demand setups to where there's a void or a gap that wasn't filled immediately back to the demand zone, okay? And if you do not understand about what I'm talking about in reference to gaps or voids, please go to the channel. You can go over here. I'll show you right quick. Click on the magnifying glass, type in gaps or voids, whatever the case is. Type in gaps, and you'll find some videos there where I'm talking about the gaps back at the demand zone. Okay, that basically just means that what price is or the market is took off to the upside. So say for this example right here, I'm going to show you because this next one is a demand setup. Okay, the market makes a high here, it pulls back, makes a higher low, break structure to the upside, breaking above this area here, 42.35. Okay, now I'm gonna remove this box right quick. The gap is going to be, or the void, I should say, is when the market breaks above on its way back to the upside here. So you have to mark your zones first, okay, your demand zones. Once the market breaks above the last down, say red candle, okay, within the zone, all right, and the market doesn't immediately pull back to the top end of that last red down candle, I mean the wick of it, then there's a void there. There's a gap resting right there. And if you can't see the gap, I'm just going to show you quickly. All right, I have, again, videos covering that on the channel. Right here, the top end with the wick of that red candle. And that bullish candle there broke above that. It kept pushing higher and pushing higher. It didn't pull back to the top end right here. All right, to close in the void or the gap there. It pulled back this much right here. Okay, so there's an area of void right there, or a gap right there, back to this area of demand, which now I'm going to bring this box back up because that's the demand zone right there. Price didn't tap into that area. So that's extremely important in part of my strategy and how I trade, because what that tells me is that the market has a lot of potential to pull back to that area, because you have to think what's truly going on, as I say, behind the curtains. Behind the curtains means what are the bank and the institutions doing? When they are filling orders, Okay, when you see swift movements like this in the market, that means the banks were involved. Okay, the institutions were with this aggressive force to the upside or buying. They're putting on loads of large orders and they can't fill them quick enough. Okay, so there's probably orders more likely that are resting right here that need to be filled. Okay, so eventually the market's going to come back down to that area. All right, and when it does, we're just looking for the rejection. When it pulls back to that demand area, fills in the remaining portion of the gap or void back to the zone here and taps in for the first time. Again, for the first time into the zone. The first tap into the zone, okay, where there was a void or gap at, is extremely important to me because it raises, it raises my interest or piques my interest because I'm looking at that because it's a high probability setup. Then all I'm doing is waiting for the rejection. So we get the break here. We got the gap back at the demand zone. Price continues pushing up. Eventually it comes back and taps back into the zone. It takes it probably about, I don't know, about an hour and a half or something like that. But eventually taps back into the zone there. And when it does tap back into the zone, all right, maybe it was a little longer than an hour and a half. But anyways, when it does tap back into that zone there, we're waiting for rejection. At that point, all we do is sit in our hands. One of the biggest parts of trading is being patient. You have to understand that when trading supply and demand, all right? It does tap into our zone. Patience pays off if you allow yourself to do so. Because look what happens. When the market retraces back to this area, okay, and it taps into it, fills that gap there, that void there, all we're doing now is waiting for rejection. It does pull into the zone deep, okay, all right, and then we started getting some momentum to the upside. When you start to see bullish candles form to the upside, that means that they're interested in rejecting the area and moving the market in the same intended direction from which the market was originally moving, right here to the upside, pulls back. Get this green candle, green candle, green candle. Typically, I'm looking for, I always talk about rejection, a break of structure. Not break of structure, I'm sorry, guys. A break of a candle in the opposite direction. I want to see the candle close above the last down red candle, all right? When we get that break above, then we want to go long, okay? And look what happens. Price runs up, okay? Runs up and tests back up to the highs up there, all right? You have to be able to see things like that, all right? Now, where would be a safe area more than likely to take profit at? Because as the market was running back down, it took out some swings, especially this swing right here, that aided in the structural break right here, okay? The break of structure to the upside, took that swing out. So as the market was running back lower, okay, as it was running back lower, it took out this swing that was aiding in the structural break right here. So this swing right here, okay, took this area here out back to the downside, which this was the swing that aided in the structural break. This is part of price action. So I would be interested in, once I see this bullish momentum to the upside, I get into the trade, at least taking the trade back up to this area right here. So, let's say I got in around somewhere above 26.5. And I could take out back up here, say around 32 or 33. The market does run higher. What you can do is take out most of your positions and leave maybe a runner on, a contract on, and just kind of follow behind the market as it's moving higher. Typically, what I like to do is on each swing back to the upside, I'll place my stop at the back end of that swing there. Okay, and right here could be maybe break even, but as it starts to move to the upside, I start to bring my stop loss up at the back end of each swing. That's protecting me or positions me into areas on my last contract to take profit, okay? All right, to lock in profit, I should say, all right? So the market did pull back here, rejected this area. Why? High probability setup, demand zone with a void or gap sitting right there, and it runs to the upside. All right, so now let's follow suit and follow price action, the market as it's pushing higher. The higher time frame is still moving higher, okay? So we're still looking for entries to go long, all right? So trade in the direction of how, what the higher time frame is telling you to trade. If it's moving higher and it's bullish, take pullbacks going long, okay? Follow the structure of the market on the lower time frame. Price action, okay, as well. Price action, you see, is making higher highs and higher lows. We get a little choppy here, making small little swings to the upside. I'm not interested in this because it's a small little pullbacks. Now, right here where it made a high at and pulled back and made a higher high, if it came back here, I'd be interested in going long, but it didn't. It's kept pushing higher. Meaning right here, this is a demand zone, okay? Loads of buying or interest to go higher here. It didn't pull back down here to the demand zone. And sometimes it won't do that. It just keep moving. especially when you have like when the market is really trending sometimes, you have to wait patiently, Don't just take a pullback to any given area, okay? Because you don't know what's going to happen. The best interest is down here because this is where the initial buying took place at. Remember that. Wherever the initial buying or selling took place at, that's the area you want to be interested in looking for your trade, okay? Because that's where more likely they're going to pull the market back to, especially if there's that void or gap sitting right there. They're going to take interest to come back and trade at that area. Now, continues making higher highs and higher lows. Now, you're saying to yourself, okay, what about right here where the market didn't tap into it and maybe got like 2, 3, 4 ticks right there? Look, if it's 2 or 3 ticks, somewhere right, I'm going to take that trade, okay? More than likely, I'm going to take a chance. For one, I'm looking at the volume profile. I don't trade or allow the volume profile to tell me when and where to take a trade at. Well, I shouldn't say where. I should say when to take a trade. And I'm not trading the volume profile just specifically, because the market is below a high volume area. If anyone's ever told you, maybe some guru that you saw online that you listened to, or some professional traders, say for instance, that the trend is your friend, buy the lows and sell the highs. I mean, that is true, okay? So if we're at the lower portion of a high volume area, typically at a zone, okay, which is a setup where everything unfolds, part of the strategy, got the breaker structure, got a void or gap back to a zone, all right? We got demand coming out of that area, and we're at a lower portion of a high volume area. Guys, that is the recipe for the setup to happen for you to be taking interest to go long. Now, the market makes a high here. Aggressive buying. Look at that. That's a lot of demand pushing market higher, right? So the market doesn't 100% tap into the zone right here. We're just a couple ticks, 2 or 3 ticks right there. And I'm going to be interested if we get the rejection daggone right. I am if the market gets back here. We're below a high volume area. Okay, loads of demand here. It comes back and let's see. Actually, give me 1 second because I don't. They may have already tapped this area. No, I'm not interested here. My mistake. Okay. Here's an example of what I'm trying to talk about, guys. Make sure you got you see a gap or an area of void sitting right here. There is no void or gap back at the zone here. Let me show you. All right. I didn't even catch it with my own eye. Okay. Right here, the market it pulls back, makes a high, higher low, pushes up. This green candle here took out this last red down candle before lows of demand stepped in or lows of buying stepped in. Broke above. The market comes back on this candle right here. The wick taps the top end of that area on the back end of the that last bearish candle right there. This is where the top end to the bottom end here is going to be our demand zone, right? Right here. It comes back and taps in. So there's no void or gap there. So we just missed that one. So that was my mistake there, guys. See, you have to be very mindful and allow your eyes to see these things, okay? I didn't even see that. I won't pay attention to this candle right here. Anyways, if there was a void or gap there to where the market just pushed off and shoved off to the upside where there was no pullback to the top end of this red candle, the wick of it, then I'd be interested, okay? So it makes a high, higher low, pushes up. Okay, I'm looking at price action as it's unfolding, okay? Pushes up, pulls back, all right? And then it breaks higher here, all right? So let's see what took place here. Now, is this an area of demand right here? Yes, it is. We have a high, higher low, a higher high pull right here. This box I drawn right here, this is demand coming out of the zone. There is a void or gap coming back to the demand zone here. So if it gets to that area and we get the break above, am I going long? Yes. Break of the candle or close to the upside, I'm going long. I'll probably get a little early because I do that from time to time. I'm an aggressive trader. But the best thing is to wait for that candle break, close above, and then get into the trade. So I'll probably get in around 20, maybe 21. Maybe you're getting in here maybe just a few ticks after me at 21 and a half, 22 to take the market higher. This was a demand zone. Break a structure, pull back, demand zone, loads of buying. We have a void or a gap back at the area of demand. Recipe to take the trade. Look at the volume profile too. Where we at? Lower portion of the volume profile right here, okay? And you want to go long, buying the lows, okay? If you ever heard the saying, you want to buy at a discounted area and sell at an area premium, okay? That means sell when price is high, buy when price is low, okay? The market moves higher, pushes up, pulls back, breaks higher. Nope, not interested here because the market already came back and tapped back into this area of demand down here. There's no void or gap, okay? Pushes up, pulls back, pushes higher, pulls back, no gap, no void here as well. It just keeps running to the upside here, okay? Pushes higher here, lower high. Excuse me, a higher low, higher high. There is a area right here. This is demand coming out of this breaker structure to the upside right here, okay? But we didn't pull back to the zone. Not interested, okay? All right, there was a gap there or a void there that the market and a area of demand, it didn't pull back. So it starts chopping to the upside, making higher highs and higher lows, okay? Now, right here, is there a demand? Yes, but there's no void or gap coming out of the breaker structure to the upside, okay? Pay attention to stuff like that. Breaks higher, pulls back. Then, we get a lot of aggressive buying to the upside here. The market pulls back, okay? Now, right here, let's pay attention. High, higher low, break structure to the upside, pulls back, okay? Is there an area right here where there was a void or gap? It sure is, okay? All right, let me show you right quick. We're going to get the rundown. Trying to make this as simple as possible for you guys. All right, from there to the bottom end of this candle right here, the wick of the third candle right here, there is space there. There's a void. There's a gap right there. Breaker structure. This is the area of demand resting right here. Let's go ahead and move. I'll tell you what, we'll go ahead and leave it there. Draw the box. Boom. Right there. Okay? Pulls back to it. But you got to pay attention to price action as it's moving lower here because it broke structure back right here to the downside that was moving lower. Okay? So when it broke structure right here, we got a break below right here. It pulls back and then another lower low right there. Okay? Then it pulls back, breaks structure back to the downside. So you have to be mindful right here because this is an area right here where price could pull back and tap and reject that. Once it rejects this area here, it can come back to this area here and continue wanting to reject to the downside. Got to be careful and pay attention what's right above you. And that's what I was talking about in a video that I just did on Friday about paying close attention to what sits right above you, support or resistance. This case here, you're going to have resistance right above you because of the breaker structure back to the downside and price continue breaking structure to the downside. So you have, resistance right above you. All right, so let's say, take a look at what took place here, okay? So price does come back to this demand area here. I'm looking above here. I said, okay, we have breaking structure right here, continuation to the downside after breaking structure below this area here at 43.70. What could I at least take the market back up to? Well, I see these areas here where there's gaps, these little fair value gaps coming down. In between these red candles right here, I'm gonna be interested in taking the market back up to and feel it at least with inside the swing here where these gaps are resting at. Okay, all right. Now I'm not saying the market can't reject right here at the bottom end at 43.66, which is with the market pushed down, made a low here, lower high, lower low at the mouth or the opening of the swing right here. It can reject that area. You see what happened here? It came up to it and pushed down and came back to this area of demand again before pushing higher. So have to be mindful of that area there because this is resistance resting right here. But when I see these gaps, okay, or imbalances in between these candles right here, I'm going to aim for that because I know that the market has to fill every area or gap. I'm not saying it's going to do it immediately, but I'm still, as a trader, I'm interested in at least taking my trade to see if it's going to fill these areas in. So here we go. Price comes back down to the demand. We get the rejection. We get the, let's see here, the break in the opposite, candle in opposite direction. And you can go long, aiming for this area here, okay? And this is a swing to the downside. Again, please do not be trying to take trades, especially going short, at the latter end of this leg. Even though we have a area of structure right here to the downside, look what happens. It comes back into that area there. You have support right below you. Support here and then the support right here. And the bottom end right here and over here. Okay, it does come up there, it rejects it, and look where it goes to, right back down into this area right here. Why? Because you have buying that came out of this area that pushed the market higher into this area where there's a breaker structure to the downside, but you have support right here with this aggressive buying to the upside here. You got to start thinking, is the market trying to push higher? I talked about this one on Friday example, an example into a video that I talked about on Friday, okay? But anyways, again, I'm interested in this demand zone here, and then I'm into it, and I'm looking to take price back up into the swing here to fill in these gaps or areas of imbalances right here. Now, if I was looking to take a trade going short, it's going to be back up at the upper portion of the leg where the market started moving lower and then started breaking structure to the downside here, not the bottom end of the leg here, okay? Because the market's clearly showing me interest where it's doing what? Breaking structure, pulling back. Breaking structure, continuation of breaking structure to the downside. And this could just be an area where it wants to pull back and push lower, okay? So you have to be mindful. This is resistance step sitting right above here. When the market taps into it, okay, on its way back up, okay, there was bullish activity right here. I don't want to be trading back or taking lows back down to where there was bullish activity coming back out at the bottom end where there was support at, because the market is maybe just trying to push higher. So be careful about taking trades at the latter end of a swing at the price broke structure to the downside. Look for, if you're going to go short, back up to the top here, okay, where it started out at, where the interest to go short or to sell off started out at, okay? Then look what happens. Exactly what I said. It broke structure to the upside. This was demand back to the upside. It tapped into this area of supply sitting right here, all right, supply right here, and rejects it, but it taps right back into that area of support where there was demand coming out from the bottom right here back to the upside. Be careful about that, okay? Understand what's taking place, you know, when the market is pulling back to this area right here, what took place right below it. There's support here, loads of aggressive buying. Be careful, okay? Demand coming out from the bottom. All right, so the market breaks higher, breaks structure right here above where 43.83, okay? So I see what's going on here. All right, it breaks higher. Breaks up, pulls back, breaks up, pulls back, breaks up. Now, I'd be interested when price comes back to this area here. Why? Because on the move to the upside, okay, this was a swing that aided in this breaker structure above 43.83. This was too, but I take interest in those areas that, again, where the activity started from, where the buying took place within the swing, okay? All right, coming back to the upside here. Where was there areas or swings that aided in the breaker structure from the lower end of the major swing right here, back in this area here? So I'm not saying the market can't reject right here, but if you look what took place here, as it pushed higher, as it broke here above, it pushed up and immediately came back to this area right here. So there's no imbalance, there's no void right here, back to this area right here that broke structure or aided in the breaker structure to the upside. Here there is, small little gap right here. I'll wait patiently for the market to come back to that area there, okay? It comes back to that area. I'll wait for the rejection. This is, you know, a swing back to the upside here. It hasn't broken below that swing area there. And it rejected that area there, okay? It rejected that area. There's demand right here. What does it do? Rejects it, pushes back higher. Simple as that. Pushes up, pulls back, breaks higher. So we're still breaking structure to the upside. Broke a major area structure here. When it pulled back, it broke higher. So just look for the ebbs and flows of your lower time frame chart as prices breaking structure. Pushing up, pulling back, breaking structure. Look for the demand zone. Okay? Pushes up. Okay? All right, break structure here. Look what, again, here's a demand zone right here. Let's talk about that one right quick. All right? All right, broke structure over here, 43.90 now. All right, so is this an area of demand right here? No. Okay? Pay attention. When price broke higher here, even though this was a swing that aided in the break over here at 43.91, I guess, or 43.92, this candle here that broke above the last, you know, bearish down candle, the next candle that came, formed the bullish candle, it came back. The wick of it touched the top end of it. So to me, there's no void or gap there. That's part of my strategy, okay? Did it reject when it came back? Yeah, it did. That's what's considered to me a low probability setup. I'll be interested in this area here. There's a small, maybe 1 or 2 tick gap right here, okay? I'll wait patiently for it to come back there. I'm paying attention to price action as it is coming back. Is it breaking areas of structure on the retracement back? Yep, it broke below this area here. Okay, it broke below this area here at 87.5, but it also broke below the major area structure right here at 85.75. That's fine. But there was still a demand area here because we've got aggressive buying to the upside. We got the void or gap back to the demand zone right there. All right, when it taps into the zone, I'm looking for the rejection. We get the break of the candle in opposite direction, boom, takes off to the upside. Okay, and look, break structure again, 4407.5. It breaks breaks above that area there. Again, got another area of demand right here. So just follow the movement. This is when the market is trending to the upside. The same thing occurs when it's vice versa when it's moving to the downside. When it starts moving to the downside, look for those breaker structures, okay, with continuation to the downside, and look for the pullbacks deep within the swing where you have an area to supply it. Again, supply is aggressive selling, okay, and demand is aggressive buying. These are examples of aggressive buying, or areas of aggressive buying, which are the demand zones. Clearly, wait for the breaker structure to happen. Boom, high, higher low, breaker structure. Breaks above here. Deep within the swing to the upside, there's demand. Market area of demand there. Where's the gap at? Wait for price to tap into it. The market taps into it. Take the trade. Go along. Simple as that. But that's all I wanted to share with you guys today. If you are trading supply and demand and are truly trying to make an income from, doing this on a daily, you have to be consistent. You have to be profitable. You have to understand market structure and be able to read the market in its entirety. Follow price action. Look for, and then implement that strategy. Look for the breaker structure. Identify, is there a void or gap back at the demand or supply zone? All these things are part of the recipe in the strategy, okay? Please do yourself that favor. It is not hard. You just have to practice. Watch this video over and over and over, and just go back to the chart and then backtest until you find consistency and looking for setups like this, okay? All right, and then demo, paper trade, whatever you want to call it, and just allow it to work for you. When you become consistent, then you'll know that you're ready to start live trading. But be patient, guys. You gotta wait for these things to unfold. Well, that's the part of the biggest problem most people have a hard time doing as traders, is waiting patiently. But that's all I have for you guys today. Please, if you're not a subscriber, what are you waiting for? I have basically given you a free strategy that you can use in your own trading to become profitable. So if you're a new trader, I would say really take time to, listen to what I have to say. I'm not saying you got to, do it, okay? That you have to take the strategy and use it as yours. You can take it and do what you want to do, and you can take it and implement it and incorporate it into your own trading, okay? Whatever strategy you may have. You can take it and mirror it. You can take it and twist it. Whatever works for you, make it work for you so you can become profitable is what I'm trying to say at the end of the day, all right? But do yourself the biggest favor and subscribe to the channel, guys. I'm giving loads of free, valuable information away. Subscribe. Click on the button. Make sure to turn your post notifications on. Make sure to drop a like on the video, guys, because I'm putting in a lot of work to make sure that you guys understand this, because I want to see people become profitable and make money in this business, okay? You can do it. If I can do it, and there are people who are part of the Discord community, okay? If you're interested in joining the Discord, find the link down below. There are people who are part of our Discord community that have taken this strategy and are making money themselves. They're becoming profitable. There are people who've taken this strategy right now and have either taken their hard-earned income, okay, and put it into an account and making money themselves, or they've, or have past evaluations through these prop firms, whatever the case is, whatever works for you, okay, and they are just as well, consistently passing evaluations. Becoming profitable, being consistent. Trust me, come over to the Discord, ask. People will tell you, hey, does the strategy work for you? Okay, it may not work for everybody because some people see things differently than the way me and you may see it. Okay, all right, but we do have profitable traders on the Discord community, on the channel, that have taken the strategy and have made it work for themselves. If you don't believe me, come over to the Discord community and ask. All right. Anyways, that's all I have for you guys. I'm going to wrap this up in today's video. Yes, it was kind of long-winded, but when you're giving or doing breakdowns like this, and you're trying to make things as simple as possible, and you're discussing the actual strategy and how to actually trade this, or trade any particular strategy, you've got to spend some time in doing it, okay? I'm trying to pass on a means of education in a sense. I'm not a teacher or an educator or a mentor, but I'm passing on some good, valuable information. It's how I do it, okay? This is what I do daily, all right? So if I can do it, again, you guys can do it too. That's all I have to say. I'm jumping off here now. I will see everyone who's part of the community into the next trading week, which starts tomorrow. So if you're trading this week, I wish you guys nothing but much success, okay? Like I always say, please be green, all right? Doesn't mean that you're not going to take a losing trade, but know when to get out of that trade to preserve your capital, to get into the next trade, to make up the difference and make some more profit, okay? At the end of the day, we want to be green, all right? Take care. I'll see everyone in the next trading video, and have a great rest of your weekend.